And let's start with the highlights.
Continued growth of Salesforce growth, and Salesforce, the numbers are kind of baked in, right? They give us this deferred revenue number, so we have a real good sense of what's going to happen in the next quarter. So what you want to see with this company is maybe deferred revenues will start to grow faster than revenues grew, suggesting that things are going to get better. But in fact, deferred revenues is growing at about the same pace as revenues, and growing at about 24% on a year-over-year basis, which is really good. But it's slower than it's been in years past.
Right. So question is, can they sustain it?
Yeah, and the question is, what are they doing to sustain it? I mean, it's growing fantastically. It's even throwing off free cash flow. Now, the company lost money in the quarter. They like us to look at adjusted numbers, but they actually lost a lot of money in the quarter. But I think it's important to look at the fact that they've done billions of dollars in acquisitions, and yet growth is coming slower, mind you, at a fantastic pace for a very big company, but much slower than it used to be, even though they spent billions of dollars to aid that growth.
David, whenever we talk about Salesforce these days, we have to talk about the threat from Microsoft increasingly stepping on Salesforce turf. How well positioned is Salesforce to defend themselves?
Well, I think they still define the industry they're in. Microsoft is a formidable competitor for anyone, anytime they really train their sights on a market. But I think Salesforce has plenty of room to grow, plenty of room to further consolidate their position in the market, even as Microsoft has room to expand its position in this space. Because the reality is, every company needs these kinds of tools. And the idea of cloud-based software for running your enterprise well beyond the sales function, which is what Salesforce is now focused on, and obviously Microsoft too, is, that's the way the business is going to be run as we go forward. And what impresses me about Salesforce is that they've really kind of captured the imagination of Wall Street and to some extent the larger world in a way that no other enterprise company has done, for a lot of reasons, beginning with the extraordinary salesmanship of CEO Mark Benioff. But they really do. They were the first with a fundamentally new approach to running enterprise software in the cloud, and they're still getting the benefits, and it's important.
We're getting headlines from the earnings call happening right now, Cory. Mark Benioff, the CEO of Salesforce, saying that they expect to grow nearly 30,000 employees this fiscal year. What do you make of that?
You've seen the building going up here?
Yes, the building, by the way, for people who don't live in San Francisco, if you're on any edge of the city, it's the tallest thing out there.
It is the tallest building west of Chicago in the U.S., and typically that's been a rough time, strangely, for companies when the edifice complex, it is known, and when they build a big building and put their name on it, the stock tends to fall. That has not been the case thus far with Salesforce. They don't own the building, they're just putting their name on it, but it is quite a sight to see in this city, and it shows you kind of the focus of this city being this big company as Salesforce. I want to show you a function on the terminal that shows us how the market reacts to Salesforce earnings. It's the SURP function, the surprise function. And what it shows you, it might look a little complicated on the screen, but when you see this function, what it fundamentally shows you is how much the company surprises by. In this case, they beat sales by 1.57%, which I'm circling there. And it shows you what the stock market reaction is. So the price change of the stock tends to be 3%, 3%, 5%, or 4%, 11%. So the market tends to react to this stock. When they beat the numbers slightly, the stock tends to have about a 3% move, an average of 7% if you look over the last 10 quarters. And yet this is kind of a muted response, because I think the market's kind of used to seeing this company beat and raise. But when they start to look at other things, they're going to start to see this slowing growth rate. I think that's going to matter. There's a command, my favorite command of the terminal. Do you know my favorite command of the terminal?
What is your favorite command?
It's EM. It's the earnings matrix.
Okay.
And it shows you the numbers from every quarter in a quick matrix, and then the percentage change. And I think this is such an important thing. You can see when a company is accelerating in terms of its growth or decelerating in terms of its growth. And what we see from Salesforce is that deceleration of revenue growth. It was growing at 35%, 33%, 32%, 24%. Now this 25% quarter is less than we've seen in prior years, and that's not great news, again, as I mentioned, after spending billions in acquisition.
Well, if they do grow to 30,000 employees, that is about twice the size of Facebook, about half the size of Google.
Well, so think about that, right?
There's obviously a lot of room for them.
It's a capital-intensive business, and we're starting to see those limits.